world, and now, unfortunately, they might not be what they had promised to be, although, of course, they're still there. Now it's Fintech time and cryptocurrencies, and everybody is studying those things. There are several groups that have been activated. I will not even start listing them. I mean, we heard about some, particularly in the morning, some at the very high level with very senior people, our leaders being involved at the FSB level and other groups, Basel Committee, Cpmi, everybody, every standard setter has its own work stream, and in most cases in cooperation, which is the good news. I mean, the cooperative space, at least in the standard setting community, central banks is very much in place. So I don't see an issue there. I think, we're all learning together. There are several individual institutions that have started to see how to apply those things to their jurisdictions. We learned this morning from the Swedish Central Bank. The Bundesbank, just to name a couple of other cases I'm very much aware of, also has started a very important study with the Deutsche Börse and the CSD to see how these new technologies can be applied to financial market infrastructures. My friends at the South African Reserve Bank have activated a very interesting project with a very interesting name. COCA is the name of the project, which has completed its activities around how DLT technology, blockchain can be used. So again, there are a lot of efforts, and what we will try to do with my distinguished panelists that I'm going to introduce you in a moment is to discuss on whether this Fintech is here to stay, or is it just another bubble? Is it the Fintech? I'm going to write a book. I'm finalizing a paper more than a book. Fintech or Fintech? Fiction. And I think my conclusion, which I can anticipate, is a little bit like science fiction. There is something true and visionary, but it is not clear whether it's going to take place quickly. And also, is it an evolution or a revolution? I guess I suspect the conclusion there. So let me introduce the panel. I have Tim on my immediate left that has been introduced this morning from Bank of Canada, and for the purpose of this panel, as well as two teams, we will call him Team C because he's from Canada, as opposed to Team B from Belgium. That is Tim Hermans from National Bank of Belgium. That you might read, his impressive career in the resume, but he has been working at the National Bank of Belgium for many years and has occupied several positions. I think two important things here. On one end, the National Bank of Belgium, for those of you that don't know, is a critical central bank in the payment and settlement space because they have the primary oversight responsibility over SWIFT and Euroclear. And then Team B has been involved, in all these debates around cyber risk and cryptocurrencies and so on. So it brings a lot of value to this panel. And last but not least, my dear friend and brother, Mario Guadamillas, who is a manager in the Eastern Europe and Central Asia region of the World Bank Group. And he has been the co-founder of the Payment System Development Group, that is the group that deals with these things at the World Bank with me. So we have started this together, and now he is very much focusing on this region from a number of perspectives, but he hasn't left our community, so he will bring also the point of view of the World Bank Group as well as PSDG and his own experience here. So with that introduction, I will then start by asking in our usual format that we are now very familiar with. The first question is probably to take a more general perspective on FinTech and trying to move from the big scheme of things. We already heard this morning about that, but I think we can elaborate from our perspective here. And probably then I will start with Tim from Bank of Canada, Team C, to get his general view, and then I will go on with the rest. Tim.
maybe I'll just make a couple of points. And I guess one of them is that when people think about the benefits of this kind of technology, I think it's easy to focus initially on, well, how can we do the things we're already doing better and more efficiently, more cheaply, etc. But then ultimately, a lot of the benefits are really going to come through a different channel. They're going to come through different products and services that we didn't, that people didn't know they needed. And that's certainly as Massimo indicated. And there is a lot of hype around this, and certainly many of there's no question there's a bubble in cryptocurrencies right now. But at the same time, we have seen many previous episodes in history where there have been changes in the way that financial systems function, and where new products and services have been invented that people didn't previously anticipate. And generally, the impact of those things is to provide services and products to individuals and to companies that haven't previously been served by the financial system, or that haven't been served adequately, and to serve needs that haven't been identified and serviced before. And of course, for a lot of the developments that we're seeing now, this is really early days. We've really got a confluence of several different new technologies. The big data we've just been talking about, distributed ledgers, artificial intelligence, smart contracts, and several other elements. And those are all coming together and being mixed and matched in ways that people didn't. I think it's really difficult to see how they're going to materialize. I'd like to make a more specific point about the technologies, because I think a lot of the benefit of what's happening now is not solely in terms of the products and services that are being developed currently, but also in what they do to energize the development of technologies. And in particular, I think thinking about distributed ledger technology, it's been popularized through crypto assets. And in regard to crypto assets, it's really a technology for dispensing on the need for trust. Basically, it's a technology that, in principle, is supposed to mean that people transacting don't have to trust any individual to stand behind the money that they're using. They just have to trust an algorithm, which is impersonal, and so long as they understand how the algorithm works, then they believe that the money is going to be limited in quantity. And that of course, as we've seen, is it is actually at some level the fatal flaw of some of the current crop of crypto assets, because you've got a limited supply through this generation process. On the other hand, you've got demand, which is being affected by speculative waves, and that the combination of those things has been largely driving the kind of price gyrations that we've been observing. But then the other point there is that the complete freedom from manipulation that this is supposed to provide is actually an illusion as well. You do have, in fact, a degree of concentration among Bitcoin miners, and in fact, some of the ability to dispense with trust is something that, in fact, has been oversold because there is still scope with these cryptocurrencies for groups to collude and manipulate the value and so on. So saying that initial purpose, which has been the popularizing aspect of distributed ledger technology, may be kind of a dead end. But on the other hand, the technology is being applied to a whole range of other things. And there, I think it's really serving out another purpose, which is trying to economize on the need for reconciliation of different accounts, and the fact that you've got a distributed ledger which is being you have certain agents that have permission to enter transactions into the ledger, and which are being verified, then means that it becomes a vehicle for standardizing some of the language in which financial transactions are recorded. And we've seen that start to be applied in a number of areas. I think most recently the Australian Stock Exchange has launched a project together with a private company called Digital Asset to considerably streamline their securities settlement processes, and I mean that sort of application then creates the potential for economizing considerably on back office functions, and that was really, that seems like a totally different benefit from what the cryptocurrency enthusiasts were promoting. So just to say that sometimes these benefits are going to come about in forms that are not really intended as part of the initial technology, and this is something that we've seen time and again when innovative products are introduced.
Thank you, Tim. It's very true. And on this DLT technology benefits, I think we have all started to learn a lot. And I was actually last week at the Global Payments Week of the World Bank in Kuala Lumpur, which is the biannual event on these things for payment systems. And everybody was talking about reconciliation and the advantages of DLT and also security advantages. The problem is that they were quoting the Bangladesh bank case, which I know very well because I've been parachuted to Dhaka a few weeks after that, very unfortunate incident, but it has nothing to do with technology. So DLT wouldn't have done much. So, I think the problem is when people start using these concepts and cases a la carte, is that they're not actually, doing us a good service, because we're mixing little things, but clearly the advantages can come also out of, otherwise troublesome cases. So, Mario, I'll try to move around here because otherwise going in circles becomes a bit boring this time of the day. So I will ask you to talk a little bit about the World Bank group and also IMF agenda that has been launched recently on this very topic.
Okay, Massimo, thank you very much. First, let me start thanking the Central Bank of Republic of Turkey and Toronto Center for inviting me. It's a pleasure to be here and have the opportunity to have these distinguished panelists to discuss about these issues and also have benefit from the discussion in the morning. So, before I go to the specific of the Bali Fintech agenda that was launched by the World Bank and the IMF in our recent annual meetings in Bali, I wanted to reflect a bit on the issue that you mentioned about this is evolutionary or revolutionary, and to what extent we are to something different, because in the world of financial sector, but in the world of payment systems precisely, we have been dealing with technology advance for many years ago. Indeed, in the early 2000s, we have what we call a digital revolution, where we started with the internet banking, mobile payments, and the like. So, from the point of view of evolutionary and revolutionary, my thinking is, well, we need to look into, well, the technologies always have been bringing some cost savings to the production function of the services provided. And I think when we look into the new cross-cutting technologies that have been discussed this morning, like distributed ledger technology, like all the big data, machine learning, artificial intelligence, and the like, I think are, of course, going to bring more cost savings, especially now if we think about the back office. Perhaps permissioned distributed ledger technology may bring some savings. So I don't think this is revolutionary, I think this is deepening. But, and there is another element, and the other element is to what extent these technologies may bring changes in the business models. And when I see changes in the business models, I refer to who are going to be the players, what is the role of the players. Even if the banks, as I believe, will continue to play a major role, but they are changing the approach to it. And also, how are the networks operating, no? Because before, especially for payment system, it was a centralized system with permission, how this is going to. So I think the jury is out on this, but I think this is at least one, from my conceptual point of view, how we can distinguish between what is evolutionary versus what could be revolutionary, no? Given on the Bali Fintech agenda, well, as we have seen this morning, there are a lot of efforts by different institutions. Financial Stability Board and the different standard setting bodies are doing very good analysis of the different elements that are affecting their areas where they are looking, being it for stability issues in the financial sector, being banking, or being securities and the like. So the motivation for the World Bank and the IMF to launch this agenda is the lack more of a framework that looks to the various issues regarding fintech in a holistic way. And of course, this needs to be done in very close coordination and cooperation, as you mentioned, Massimo, with all the others. So the starting point of this agenda is to take advantage of the opportunity while mitigating the risk. As we have seen, there are a lot of opportunities, among them reducing cost and friction system, increasing efficiency and competition, narrowing information asymmetries, and for us at the World Bank, very important, broadening access to financial services, especially for low-income countries. So, of course, this agenda doesn't come without risk, as we have been discussing also extensively this morning. Consumer investor protection is an issue. The need for clarity on the legal and regulatory framework, potential for regulatory arbitrage is another example of, and of course all the issue of financial sector, financial safety nets, including lender of last resort, that was discussed also this morning during the stability, and financial integrity issues as well. So on all this agenda, I think one of the main challenges from my point of view is that while the policy making this time will need to be nimble, innovative, cooperative, but it will need to have or strike the right balance between enabling financial innovation and ensuring financial integrity, consumer protection and financial stability. And later on, I hope that we have the opportunity to discuss this a bit more. It's very holistic as it goes across all the different financial services provided, especially payment system we'll discuss now. So let me finalize this initial remark just saying that this Bali FinTech agenda has 12 elements in terms of looking into the different aspects that I like to categorize in 4 major areas. One is a foster enabling environment to harness opportunities. And here we're talking about issues in how to enable, embrace and enable the new technologies, how to reinforce competition and also promote financial inclusion and financial market development. A second category on this agenda that is very important is strengthen financial sector policy framework. We have talked a lot about monitoring developments, adapt the regulatory and supervisory framework to the new realities, and also modernizing the legal framework is a very important element. The third element is address potential risks and improve resilience of the system, and we go through all the risks from financial integrity through ensuring the stability of monetary and financial systems, and of course develop robust financial and data infrastructure as well. And finally, promote international collaboration because, as you mentioned, this needs to be a truly cooperative and collaborative approach. So let me stop here for these initial remarks.
Thank you, Mario. So now moving to Tim. I think it is important also, now that we have talked a little bit in broad terms, to just bring the perspective of the EU and also the Cpmi, if you wish, on these topics, because clearly a lot is happening there.
Okay, thank you, Massimo, and thanks all of you for having me here. I do want to apologize that I have to run at 5:15 because when arranging my traveling plans, I didn't account for the hectic traffic in Istanbul, so they told me that I have to leave early to catch my flight. So I will focus, as asked in my preliminary statements, on perhaps on the EU perspective. Our headquarters is in Brussels, so that's the next best thing to the Commission, I guess. And I think that in the EU, well, we are really aware of the importance of technological innovation in general and of fintech startups in particular as a driver for financial sector development. And we do believe that fintech, and specifically fintech startups, are expected to bring huge opportunities in terms of efficiency, access to finance, cost savings, but also to competition. And so in that respect, I do think that fintechs will play a crucial role in the digital transformation of the financial sector. And I think specifically in the payments area, because there we see a lot of initiatives. So the European Commission promotes this view also, I think, and they promote the view that the EU should become a global hub for fintech. And to do that, they published a report, a Fintech Action Plan, published in March of this year. It's an 18 pages document, and you can find that on the website of the European Commission. And it was, I think the purpose of that document was twofold. On the one hand, it was designed to contribute to the objective of the EU to create this digital single market in the EU. And second, another purpose of another objective was that the EU should make rules that are more future-oriented and aligned with the rapid advance of technological development. So there are a few items or chapters in this Fintech Action Plan. Maybe I will just touch upon some of them. First of all, there was the action plan sets out these steps to enable innovative business models to scale up and also support the uptake of new technologies. It has also an important piece on cybersecurity. So the plan insists on improvement of cybersecurity by cooperating between all the players in the financial sector. And as a central banker, as you mentioned, which is the lead overseer and the lead supervisor of Euroclear and SWIFT, I can only applaud that, but we see that the risks of cybersecurity are increasing day by day. So that's a very important piece in this action plan. The plan also includes the creation of an EU fintech laboratory, which I think will be very important, and that will be like a kind of non-commercial space in which European but also local authorities can interact and can engage with fintech players in a neutral environment. So to start to understand each other better, that's a great beginning, I guess. And then there's a very important piece, I guess, on sandboxes. And we hear a lot of sandboxes in the fintech, in regulation. And that's a good thing, but I do think that there are a lot of regulatory issues with sandboxes. And the Fintech Action Plan tries to give some guidance coming from the European supervisory authorities on these sandboxes. So ESMA and EBA are working together to give some guidance on this sandboxing. Because it can be challenging for regulators to understand the business models of these fintech startups. We don't always know what they want to do. They're often very good at technological stuff, but not so good in explaining what they're doing and the risks that they are taking to do what they want to do. So there will be some questions raised by what is the appropriate status to give to these kind of fintech players. And we already made a start in the EU with the new Payment Services Directive, to PSD2, in which, we listed all the financial services that were attributed to payment institutions. So we defined all the services that are attributed to this status, and we added a few new ones, like the payment initiation services or payment aggregation services. So, and this is very important because that's the basis of what we are calling the open banking landscape. With these new services, fintech companies can actually ask the banks to open their accounts up to them. And they can start payment initiation services, and the banks have to open their accounts. Well, if their clients agree, obviously they can't just ask to open their systems. But that's very important because that means that little players can now also be active in this field of payment services. So for small fintech players, that's a very important regulatory improvement. That that raises the question, I think, that how these fintech players will affect the incumbent actors. Well, that can be in many ways, but we can't forget that it's not because banks are big and they already exist for a long time that they don't innovate. We see a lot of investments also with the incumbent banks. They are cooperating with new fintech companies, and we even see that if there's a real interesting technology which arises, they just buy the technology and they integrate it in their own systems. So I think there's room for, as well as for fintech players, probably more in the front end of the payment area, and then for the incumbent players, probably more in the back end to create the networks and infrastructures on which the payments are processed and settled. So maybe we can leave it to that for now.
Thank you very much, Tim. So just a quick thing, just to keep ourselves at least, you take with your very important comments a couple of memories. One is in terms of talking to fintech people. I mean, when the Ripple kiddos came to me to visit me years ago when they were almost in high school, they were telling us about the beauty of what they were doing. But they didn't speak our language, so we had to spend a lot of time just trying to understand each other. I mean, it was that one was right and the other was wrong. No, just they meant something by compliance that was not what we meant, and so on and so forth. So I think it's very important that now I think these two communities are getting to know each other much better. And then there is a very senior person in India that has occupied a very important position there that was telling me about the danger of a sandboxes becoming black boxes and all the issues that you alluded to. And I also invented another term, which is a quicksand boxes. So, it is interesting how we were having, of course, you can imagine that was a very informal discussion at dinner that, was going on and on with jokes. So I picked these two things, which I think are reflected as concerns, together with the advantages of those approaches. So I think we will not have time, unfortunately, here to elaborate on those, but I think it was important to mention that too. So let's move down to a second round where we are going to be a little bit more specific on some of the concrete developments, and of course without having the time to go deeply into any of those, but just to touch upon some of the developments we are seeing in the payment space where fintech can bring some new perspective and make our business more efficient possibly. And in that sense, I would start with Mario. This has been, let's say, the vision of many of us in this space, certainly my colleagues in the payment system development group, to see how the technology can be used, and now fintech, if we like that term, to help countries leapfrog. And it's easier said than done, because it seems obvious that one can take advantage of new countries' advantages and so on, but unfortunately this is not always straightforward. So can you just give us, many examples of practical ways to use these things in the developing world through the experience of PSDG?
Okay, Massimo, thank you very much. First of all, as a creator of the PSDG, I can report that we are successfully advancing this agenda, for which you will be very happy. But yeah, let me first reflect a bit on the potential, on the opportunities. And I was looking before the conference to some statistics that World Bank produced the Global Findex, and it was a few months ago published for 2017. That is a big database across all the countries on financial inclusion, access to financial services, and so on. I was looking into comparison of what is mobile account penetration countries in terms of percentage versus bank adult population across the different regions, and there was a very important gap. Very much, higher gap, for example, in some regions as Sub-Saharan Africa or South Asia, and less in other regions, but in all the regions. And I think this is very important because while we know mobiles were a means of interface with payment systems in the world of mobile payments, now they provide new access to other type of financial services that are fintech services. So when we look, I see this is the potential, and there is a high potential there. So In this context, we of course are, PSDG is very aligned with what I explained for Bali Fintech agenda. While looking to the opportunities, we cannot forget the issues of risk, we cannot forget how to do the regulatory approach. So let me very quickly tell you about what are the innovations we are looking for, what are the regulatory approaches, and what are the main risks that I think need to be taken into account. So in terms of the innovations we are looking for our own knowledge of this, but also to the extent that this can be implemented through our operations. And we are, I would say, still at early stages on what is a fintech world from the point of view that I explained before. So we're looking to instant payments, and I'm not going into detail because I know that other panelists are going to discuss about this. But we're looking into application programming interfaces. As we know, they provide machine-readable access to consumer data stored on financial institutions, and through this access, there may be programmatically initiating transactions like payments. So it's very relevant for payments. And then, of course, in this area of APIs and open banking, there are different approaches. We're looking to some of them, as you mentioned. We don't want to go into detail, but some of the issues we're looking is in the legal basis. What are the institutions affected? What is the scope of the access, if it's read and write or both of them? What is the institutional setup, and what are the different technical standards? Another innovation we are looking is tokenization. That is, of course, the process of substituting a sensitive data element with a non-sensitive. And this is, without going into details, allowing for a lot of new services in terms of payment, like Apple Pay, Google Pay, or Canon File. There are some of the examples that can be done with this. One other important is the issue of IT and payments. As you know, trust and security has been always an extremely important element for the functioning of payment infrastructure. And then when we compare the physical context versus remote context, we'll have in the physical context a DVP at same time in same location, and then remote it will be a DVP in different times, and payment systems have, of course, dealing in very different way with this aspect. So now what we see here is new industry developing that is enabling customers to organize, control access to parts of their digital identity. And here we have the traditional providers of payment systems like electronic payments providers or payment industry players that can play a role here through the authentication infrastructure they have developed. But on the other side, these other identity services providers, they can also provide services in the payments world as well. So I think this is a big, important innovation to take into account. And the other one, and final, is big data and payments. I'm not going to go into details because we have a discussion in the previous session, but I have to say that retail payments is, of course, a main source of data that can be, with the speed processing, then development of smart algorithms and so on, have a very important element. So, just to finalize on the issue of the innovations, I have to say that though we are not looking in isolation from other foundational infrastructures, it is coordinated with issues that are related to, for example, telecom, digital and financial infrastructures and the like. So when we look into our projects, we try to not be so fragmented in how we approach this infrastructure. So on the second topic that I mentioned, the legal and regulatory oversight, I think this is very important. In terms of the legal, there is the issue of clarity and certainty. That is very important. And so the legal framework needs to keep pace with evolution, basically. And of course, when we look to the payments world, we have seen already many advances in terms of electronic signatures, dematerialization, and so on for many years. But now we have new technologies and their potential, for example, of distributed ledger technology and back office. So how are we going to address this from the legal point of view as an element? Another legal element is the greater harmonization needed across jurisdictions. Again, in the payments world, many jurisdictions, most jurisdictions have gone through comprehensive payment system law reforms for many years. But now what are some elements that need to be taken into account is harmonization of the legal terminology with all these new emergence, and the treatment. That's a very important one. The other element on this is the regulatory and oversight. that, as I mentioned before, it needs to facilitate safe entry of new products, activities, and intermediaries while still responding to the risks. And let me very briefly mention a few elements that are important for consideration. The approach of oversight, for example, functional versus institutional, something has been already in the debate of payment systems for years. The proportionality is an issue that is very important here. The issue, how do you use RegTech and SubTech? Again, not going into details because we had a very good session this morning. Issues related to regulatory perimeter and regulatory arbitrage, and the need to ensure that there are skills and specialized staff for this evolution. So when you look into what are some of the regulatory approaches that we have seen around the world, we have, let me say, mention 4 of them. Wait and see. So of course, you monitor a trend and see what happens. The advantage is that you don't hamper innovation, but of course, it may generate important risks. You have another approach that is test and learn, that is a custom framework to test a new idea in a live environment. Of course, this still allows for innovation, but with a more clear involvement of regulators. But of course, you need to have the capacity on the regulators. We have seen this approach in several African countries and Asian countries. You mentioned, Massimo, the regulatory sandboxes, very famous, as we know. And then these are down in a safe environment with a supervised, in a flexible environment with a supervised environment by the regulator. Of course, it's a smaller scale as an advantage and a contained environment, so it limits the risk. And it has positive signal to the markets, but also creates some problems in terms of, especially if there is limited regulatory capacity, what is the coordination that is needed when different authorities are involved, and finally some competition issues because of potential preferential treatment. And the last one is regulatory reforms, like there is reform of all the existing policy and regulatory framework around it, and of course this is an approach that may contain more the risks, but at the same time, it may hamper innovation. So we have seen some of these implemented in Mexico and Switzerland. And by the way, the regulatory sandboxes, we have looked into about 28 globally. So let me finalize my intervention on this point with mentioning some of the main risks that we have identified that are relevant. One is the stability of the domestic monetary and financial system, again, has been discussed. Second is the fintech enabling payment system could, of course, improve the resilience of payment flows and reduce the risk, but also could amplify risk at times of stress. And one of the issues to be think about is if we need to review the concept of systemically important entity expanding to entities providing critical fintech infrastructure. And I recall that there was some discussion of systemic important institution this morning. A third important risk is the increase of IT interdependencies and operational risks. A fourth one is the issue of regulatory perimeter considerations, and especially when we look into outsourced operational support, and there was again this morning some reference to cloud services. This is very important in terms of how you can approach that. Cybersecurity is paramount, is, as we know, a type of operational risk, but has very distinctive characteristics from the traditional operational risk. How to address that? Also, another one that is very important is integrity on data. Data ownership, protection, privacy become all very important. And then there is a need for strong frameworks to protect individual and institutional data. And I don't think this is something that in other worlds, as you know, on the credit reporting world has been put a lot of attention, but not on other areas of the financial sector. And perhaps there is some lesson learned. And finally, with this, finish this intervention, consumer protection for us is also a critical element.
Thank you. So very glad to see that my old team is still alive and kicking and has survived its founder, which is good. Always what we want to see as parents. And then I think a couple of developments that have been probably the most important ones in this space have been ignored or minimized. I just want to name them just when we reflect about the potential opportunities for the future, we should also look at the past, the recent past. So when everybody was going to Nairobi for M-Pesa, China UnionPay was expanding the card base in China from 200 million to 2 billion. But nobody noticed that. And of course, I'm not saying this is the best model, because there are issues there too, but clearly, there was a significant development. And, still over 50% of cashless transactions in the world are card-based. Now, if I use my American Express on my phone, somebody would call it mobile money, but this is not what we payment system people do. It is still a card payment. So, but nobody noticed that, because we're always after the exotic things. And the same happened when in 2016 in India, the currency substitution program, so to speak, was called demonetization, but then after a few weeks, the RBI issued a new set of notes. So, but let's say currency substitution is more correct. This triggered a number of developments that were already underway, but they have been magnified by this event. But now we're talking about fintech, and so people are talking about that, and they are ignoring that fintech. Some sort of fintech is already happening in some of the big countries, but not in the ways we believe, we all believe it will happen, which is through DLT and so on, just by using more traditional means of payment. One of those things, though, that to me, this is my personal opinion, has the potential of being a revolution in this space, is all the debate around instant payments. Fast payment, faster payment, instant payments. And I know Tim will bring some perspective on that, so without further introduction, I will leave it to him to just shed a little bit of light on this very point.
Okay, thank you, Massimo. I think you're right that one of the most noteworthy trends in the payments area is the emergence of a lot of instant payment, fast payment schemes all over the world in many countries. And I think it's important to define what we mean. As you said, a card payment isn't an instant payment. I mean, a few weeks ago, Belgium was late to have Apple Pay, but a few weeks ago they came to Belgium, Apple Pay, made a big fuzz out of it, but it's just a chip on your iPhone where you store your card data. And they access your bank, and it's just the card scheme that's behind it with an acquirer. I mean, that has nothing to do with instant payments or faster payments. So when I'm talking about instant payments or faster payments, I mean payments that are processed and settled in seconds, and not in a day or 2 days like many card schemes take to process a payment. And I think that the need for such payments goes along with the trends that you see in modern society. I mean, people are used now to interact with each other in real time with their mobile phones and on social media, and they cannot understand why it takes, when they go to the bank and they want to do a payment, why it takes 1 or 2 working days to process and settle that payment in their accounts. So we have seen a lot of innovation in this space, and I wanted maybe to elaborate on one such innovation, but the one I think is the most important of the recent years. And when we talk about such innovations, we often think that it must be a fintech that has done this kind of innovation, because fintechs, they do new stuff, exciting stuff, and it's often associated with instant payments. But the innovation I'm talking about is, it was launched 2 weeks ago on November 30th. And it is a new European-wide instant payment service, and it's not developed by a fintech, but it's developed by a well-established incumbent actor in the EU, and which is the European Central Bank. And obviously, I'm talking about TIPS. We mentioned, the name was already mentioned this morning, and TIPS stands for Target Instant Payment Settlement System service. And this TIPS is developed as an ancillary service to Target 2. 24/7 by 365 days a year basis. So TIPS will enable clients of participating banks to settle or to exchange payments within 10 seconds, and that's regardless of the country in which their banks are located. I have to say in which SEPA country their banks are located. So the banks must be in a European payments area country. So at the moment, TIPS is only in Europe, so it's between European banks, but it has designed in such a way that you could add other currencies at a later stage, so there are some connections possible in the future. And it could also connect, it has also been designed to connect at a later stage to other instant payment platforms. If you introduce new currencies, you can also introduce new instant payment platforms. So I think that's a really big innovation. That means that interbank payments now are, well, processed within maximum 10 seconds in, let's say, the European Union. We haven't seen that before, so this is a real innovation. Now, does that mean that the smaller fintechs in this area are out of the game? Well, I don't think so. I do think that these new fintech startups can leverage on these kinds of instant payment systems to provide new services. And I do think there are several categories of fintechs that can take advantage of this new system. In the first place, new banks. So if you talk about these internet platform banks or neobanks, well, if they have a banking license, they can directly connect to TIPS and can provide for new services better mobile apps, a better instant banking platform, so they can take direct advantage of these new systems. For non-banks, it's perhaps more difficult because they don't have a connection, they don't have a direct connection to TIPS because it's settled in central bank money. But I do think there are opportunities for non-banks also. I've talked already about PSD2, and they can use that directive to provide for new services when they want to introduce new payment initiation services or payment aggregation services. They can take advantage of this new open banking landscape to provide for new services like well, aggregating accounts. If you're a citizen, with, as a lot of citizens do, I guess, if you have multiple bank accounts, well, these fintechs can provide for a platform that you can aggregate all your account information in one place, and that you don't have to have 3 or 4 different mobile apps from every bank where you have a banking account on your mobile phone. So there are some new services that can be developed. I do also believe that in domains like AML, fintechs can make a big effort to make that more easy. AML is very costly. If you look at the costs of a payment, I do think that AML is the biggest part of the cost of payment today. They can also develop platforms to do, for instance, micropayments on the internet. That's all maneuvering space for fintechs. They can replace paper-based instruments. I mean, there are still, in some countries in the European Union, they are still using checks, paper checks. Fintechs can make platforms to replace those paper instruments by some other and better solution. So I do believe that there is room for competition in the future for fintechs, but as I told, probably will be in the front end of the payment and not in the back end. Back end will always be networks and infrastructure of reliable and probably incumbent partners.
Interesting. So there cannot be a panel on payment systems and services and fintech without spending some time on current central bank issued digital currency or cryptocurrencies. So we heard this morning that there is something called deputy governor wisdom. So we will use Tim, to give us some wisdom on this topic, and as well as probably elaborate a little bit on some Bank of Canada initiatives on technology that have nothing to do with that, but are very important for us to know. And as we're trying to catch up with time, maybe I will ask him to merge a little bit these two comments so that we can then move to question and answers.
Okay, well, I mean, we already heard a bit about this from Cecilia Kingsley this morning, but on the first topic, certainly a number of central banks are exploring digital currencies, and I would say the motivation is really twofold. One of them is the Swedish problem, which is banknotes disappearing from circulation, and then the question, and that raises the question of whether it is essential to have some central bank liability as part of the financial system, and whether that is something that provides an anchor of stability in the system, and if so, would some innovation to let's say to bring about an evolution of banknotes into something that can be transferred digitally be a way of maintaining a degree of stability in the system. So that's one sort of motivation, which is the one that the Riksbank is currently looking at. I mean, the other is the emergence of various private payments means, including various cryptocurrencies, but other products like that, and the sense that if those products developed in a way that made them seriously useful to the point where they were actually being adopted and used heavily by transactions, that could raise questions about the ability of central banks to maintain stability, to maintain price stability and financial stability. And in that case, one could conceive of a central bank offering its own product, which would carry with it the trust that the central bank has established in maintaining a stable means of payment, and that could in effect crowd out the private products, or perhaps even be supported by a legislative mandate, the way we did with banknotes. We had privately circulating banknotes, for example, in Canada, and then the Bank of Canada was established and took over a monopoly of issuing banknotes. And the idea of that was that the central bank, by issuing that product, carried a greater degree of weight and public trust behind that product, as well as, I think, frankly, the idea that there's a network effect to the acceptance of banknotes, and if the benefits of that network are captured by a private monopoly, then that's in effect it's a public good for private profit. Maybe it's better that it be for public profit and reflecting the fact that there's a public investment involved in establishing that degree of confidence in banknotes. So that's the sort of thinking. And I mean, at the Bank of Canada, we have a research stream on this, which has been going on for a while, and we've got a space. If you go to the Bank of Canada website, bankofcanada.ca, then there is a place in our research, the part of the website on fintech, and it has the various work that we've been doing on central bank digital currency. I think this work is now kind of evolving into something that looks a little bit less like pure research and a little bit more like contingency planning, in the sense that we have a mandate now to come up with a recommendation with regard to under what circumstances the Bank of Canada might be prepared to recommend going forward with issuing a digital currency, and if so, what it would look like. So that doesn't mean to say that we're rushing to do it. It means just that we have to be a little more concrete in our recommendations, and possibly at the end of that period, we would decide that actually there are no circumstances under which this would make sense. But it is a question we're approaching very seriously and in more concrete terms. So that's central bank digital currency, which is really about a retail means of payment that would be analogous to banknotes, but would be usable in a digital world where transactions are being undertaken online. We have another set of research which is really more looking at the wholesale payments and settlements space, which has got the moniker Project Jasper, and which is named after Jasper National Park, which is a famous tourist destination in Canada, in the mountains. And Project Jasper, I think initially was an experiment in applying distributed ledgers and encryption token to undertake large value transfers among banks. And so it was a project that was launched by the Bank of Canada in partnership with some large commercial banks in Canada, as well as with Payments Canada, which operates our large value, in effect our wholesale payment system. And I mean, broadly, the conclusion of that control experiment was, yes, you can do it, but why would you want to? Because it doesn't, in effect, it doesn't actually bring any cost improvement over the way we do things currently. And so, I mean, the conclusion was that sort of simple experiment, again, it's feasible, but it's not necessarily an advance over what we do, given that we have a well-functioning system with a trusted a party at the center of it. We looked at another, that was phases 1 and 2 of Jasper. Phase 3 looked at extending it to not just to large value transfers of funds, but also delivery versus payments for securities transactions, and that was done in collaboration with the Toronto Stock Exchange, TSX, the group that does the affiliated with the Toronto Stock Exchange, which covers securities payment and settlement. And again, the answer was yes, you can combine those things. You can do them using distributed ledger and with tokenization of both the securities and the money. But again, you don't experience significant cost savings. And so then the question is, well, where could you actually get cost savings here? And one of them is to take a set of payments that don't currently function very efficiently. And obvious candidate would be cross-border payments, where you've got the whole correspondent banking system, which is notoriously expensive, slow, and lacking in transparency. And there, of course, there are a number of issues that account for those features, but it is acknowledged to be an area where there's room for improvement. So we now have Project Jasper 4, which has been launched in collaboration with the Bank of England and the Monetary Policy of Singapore. And initial stage of that was actually to have a structured dialogue with among the 3 central banks involved, but also some of the private sector players in those markets, and to identify where are the pain points. I mean, why is this such a cumbersome and expensive process? And there are a number of things that were identified, and then the next stage was to look to broadly characterize some of the different solutions. And some of them really are ones that wouldn't involve distributed ledger, but they involve things like extending the hours of operation of the large value transfer systems of the countries involved, because Singapore and Canada have systems that aren't open very much at the same time, and then things like the messaging systems and so on, and to try and get some interoperability among the ways that transactions are sent. But using a distributed ledger based solution where you actually have tokenized central bank reserves can actually be a way of cutting through some of the other elements, and it does actually point to a direction that could be used. Now we still have a lot of work to do, and actual application of this sort of thing would involve some policy issues. I mean, for example, would central banks be happy to have tokenized versions of their reserves floating around in other countries and other financial systems? Not clear what issues that would raise, and that would need to be addressed. But and for example, would central banks accept each other's know your client compliance? Because otherwise you have to do it twice in each. You have to do it separately in each jurisdiction. So again, this is something that I think has been really helpful, and partly because it promotes some discussion of how these technologies could be applied, but also, I think importantly, because the staff working on these things have an opportunity to get their hands dirty and actually to get a more concrete understanding of how these things actually work and what uses they might be put to.
Thank you, Tim. So, just two quick reactions. One is that many of us have always looked at this issue of a central bank issue digital currencies as something that is already happening. Meaning, central banks already issue, their liabilities digitally. They are not available to the public, but they are available to the banks and those that participate. They have accounts with them. So, I mean, you mentioned very clearly this is talking about those products in substitution of banknotes. But it is very important to make this distinction. Just wanted to say that. And the other thing is that those of us that have been championing the efficiencies in the remittances market, including myself, up to last year, was co-chairing the Global Remittances Working Group. Will not bother you what it is, but it is a big thing. And there are already reductions in the cost, but not what we were expecting. And so to see how this can be improved is very important. And actually, recently, SWIFT revamped its own initiative in this space to the so-called GPI, which is Global Payments Initiative, after the fiasco of the SWIFT Remittance. It was something that I had inspired in the past, but I go a little bit incognito because it was such a fiasco that, of course, they implemented. I just said they should do something about it. They did it wrong, and somebody SWIFT still blames me. But, anyhow, so I think it would be important to see what happens on this front. So I will then ask you offline a little bit more about Jasper 4 and see how we can leverage on those findings. But I think it is time now to open the floor because we want to make sure that you have the chance to react to some of these comments. And in particular, if you have any burning question to be addressed to Team B, that is going back to Belgium in 10 minutes, please do so. The three of us, can stay in case there is a desire to stay a little bit longer. But let's open the floor. See if at this time of the day you still have the energy to interact with us. Don't feel intimidated, but also don't feel obliged. Okay, there is one here, then Giuseppe.
Good afternoon. Yes. Lionel from Bank of Mozambique. I would like to know, first, congratulations for the presentation. My question is regarding to Fintech versus financial inclusion and the rules that of the PFMI. How is there any framework to handle the PFMI financial inclusion and the Fintech solutions that has been on the sandbox or whatever it is?
So I heard many talking about efficiency of payment system. Considering the recent start of this TIPS system. I was wondering whether we have some comparison figures between TIPS and some other payment system based more DLT based. That's my question.
Do I need one more? Just in case.
I was interested by Tim C's point about one of the hurdles being know your customer at central banks. I was very interested in that. Are central banks thinking about doing know your customer on non-banks or non-financial institutions? How far down the sort of customer chain might central banks be ready to look at that? Because it's one thing, obviously, if you know the customer of the bank, you know the customer as a bank who you're interacting with, but then there's the question, well, what about that bank's other customers? Do you feel confident about what they're doing there? Thank you.
Okay. So I think we can, coincidentally, we have, it seems like one question per panelist. So I think we can start maybe Mario and you and I. So you don't can take on the question from our colleague from Mozambique.
Okay, thank you very much for the question. Indeed, in terms of looking to what could be a framework that could help to guide in approaching fintech, I was taking a look before coming to the panel in these days in preparing for this discussion on something that the World Bank did with the Cpmi in terms of general principles for international remittance services. And I know, Massimo, you were very much involved. I was part of this, and that was published in January 2007 in a very different environment. But when I look to the framework that was established, of course, it will need to be adapted to the new reality. But there are some issues that look very much into the discussions we were having today and they are having. And just let me mention a few of the things, no? Because when you look to the objectives, for example, in addition to the typical objectives of safety and efficiency, that is across all the payment systems standards, there is the issue of accessibility, affordability. So I think these are issues that are very much related. When you look into some of the principles, so the first principle is indeed transparency and consumer protection. That is something very much related to some of the discussion on risk. When it refers, for example, to payments infrastructure, it looks into efficiency issues, notably. And when it refers for legal and regulatory frameworks, it talks about sound, predictable, non-discriminatory, and proportionate. So I think that I don't want to go on and on because we're with a limited time. But let me finish also that I think that had an innovative approach where you have some principle that was talking about the role of public authorities, as all the standards do, but there was a role for service providers, and they actively implement these things. So that, I think this is very much the case when we talk about fintech, that it could not be more of a compliance-based type of approach in terms of supervision. So without going into details, and of course this was provided in a different context, I think when I was looking to some of the non-bank services, maybe front-end, back-end, or payment system operator, mobile money operators, that some of the ones that are providing some what we call today fintech services, this framework could be, I don't know if the one that should be applied and so on, but I think it's a useful one to think about these issues.
Yeah. Thank you, Mario. And let me also add to that, which is a group that I co-chair, another group that I co-chair, that more recently issued the World Bank Cpmi guiding principles for the payment aspects of financial inclusion, which is very much building on those blocks. And it also looks into the importance of technology and also the risks of technology. So I think that's very important. And when we talk about probably you were mentioning also the PFMIs, if this is what I understood as the principles for financial market infrastructure. This has to do with wholesale systems mostly. But again, the experiences of Project Jasper 1, 2, and also the Bundesbank project and others, it says that in the wholesale space, although all of those simulations have reached the same conclusion, which is there might be advantages at the margin, but it's probably they are fixing what is already fixed over there for the time being. So for a number of reasons. So in that context, the PFMIs might be less applicable, so to speak. But still, of course, the technology is an issue, and if we look at the principle 17 of the PFMIs, which has to do with operational reliability and risk, I think this is where technology can play a big role and also pose some threats. So with that, I think we have a question on instant payments, tips, and so on, and probably.
Well, the question was about the efficiency when tips compared to other systems, and more specifically blockchain systems. I don't have those numbers. I do know that a settlement within tip system is less than 10 seconds. When we're talking about DLT systems or blockchain systems, well, you need to have proof of work or consensus mechanism. And as far as I know, well, the most used blockchain, cryptocurrency, Bitcoin, that takes a lot of time. The consensus mechanism takes well over 10 minutes to reach consensus. Ripple is much faster. So Ripple was, with Ripple Net, they tried to make a platform to do cross-border payments in a more efficient way. Well, it's not as efficient, I guess, as the GPI, not as popular as the GPI. I think the GPI settles now or transfers messages with an underlying value of more than $100 billion a day. That's Ripple is nowhere near that. So Ripple is much faster, but the problem with blockchain and consensus mechanism is often scalability. If you have more transactions, consensus mechanism takes longer to be reached. And also irrevocability. With consensus mechanisms, well, you're never really sure. You can be pretty sure, but never totally sure. So that's, when we talk about finality and irrevocability, I don't know if you can reach that with a blockchain system. So that's a big difference with DIPS. So it's different technology, but I would argue that in this comparison, DIPS would win.
It's also TIPS vis-a-vis cards. It will be an issue for the future because one of the beauty of the incumbents in this space is that we all know how to manage those relationships. So we know the merchant knows what happens. If you find a problem in the payment, you can always go and try to revoke it. So and of course there are frauds, but it's an environment we know vis-a-vis an environment we don't know. And if it is a centralized system, it's probably a little bit closer to what we already know vis-a-vis an act. But of course the jury's out. I think we all agree with that. Rupert's question too, Tim.
The KYC aspect is, I think, is a pretty complicated one, and it's one that I think has not been fully resolved. In principle, of course, KYC is one of the factors that adds cost to cross-border payments, because with the correspondent banking system, you've got each of the you may have a chain of banks that are involved, not just the sender and the sender's bank, but the receiver's bank, but the correspondent banks in between have to go through that sort of certification of KYC and all that. So that in principle, if you had the payments being settled in a central bank, a tokenized version of central bank money. So, for example, I'm making a payment to Singapore, to an agent in Singapore. My bank has to certify that they know me. as a recipient's bank in Singapore has to certify that they know him or her, but you don't have these other stages in between. And in principle, that would save on those requirements. But of course, that does make assumptions about how the AML-CFT authorities would treat a system that hasn't been invented yet. So it's I mean, this is clearly something that would need to be explored further if anything like this were ever to be developed sort of further than a controlled experiment.
So with this, I think we can close here, and let me, being the last panel, let me take this opportunity to thank, of course, the panelists, all of you for your attention, and also for Central Bank of the Republic of Turkey and the Toronto Center for a wonderful opportunity to be here in Istanbul discussing this very important topic. Thank you very much.
Dear guests, this is the end of our conference. Thank you all for your participation, and we hope to see you in future events. Have a nice evening.